Homin, our Asia macro strategist at Lombard. Odier joining us now from Hong Kong to talk about the markets globally. We've of course got the backdrop of the German election vote count going on. No huge shocks when it comes to the numbers. It looks as though it will be a tight race, and global asset classes really taking it in their stride. Any implications as a result of the outcome of that election when it comes to what you're doing in the investment space concerning Asia?
Well, there are a bunch of different developments around the world right now. So obviously, we wouldn't say this will be the main driver for global markets. But as far as the European markets are concerned, we would argue that this is a modestly positive event, even though the outcomes are more or less in line with what the markets have been expecting. And we'll see how the parties negotiate the ultimate coalition government here. There are obviously contradictions in the campaign pledges by different potential partners in the traffic light coalition that's most likely outcome. For instance, the Liberals obviously insisting on putting more restrictions on the pan-European project and also the fiscal stance of the government, whereas the Greens are obviously far more ambitious. So we'll see how they negotiate these differences over time. But what's clear is that this election is happening after the flooding that occurred in Germany that took a really big bite out of the support for the outgoing government led by the CDU. And here we think all three parties will probably agree the need for investing into infrastructure for the country. And I think we think at the end of the day, this will be a compelling enough reason for the three parties to agree to an agenda, a workable agenda. So once that's finalized, I think the markets will, at least, at worst, get the continuity. But probably they'll likely get a government that's a bit more clear on these pro-growth initiatives in the end. So we think that's modestly positive outcome for the European markets in particular.
Okay, modestly positive outcome. Of course, negotiations are going to continue, but it looks like there's an edge for the Social Democrats here. Tell me what that means for your European asset market exposure. What should we be looking out for as markets start to digest this election result today?
Well, first of all, we as a firm have been extremely aggressive in pursuing sustainable investment in our portfolios, and we think this event will definitely put more support for this type of investments in the medium term. So we think this is positive in that regard. As for the overall market, the equity market in particular, we think there will be potentially a small boost, a slight boost for the European cyclicals. Once the investment agenda becomes clear, then these names could potentially provide a bit more upside. And for the European equity exposure, we've been basically maintaining a balance between a large cap cyclicals and some high quality companies. And we think these universes will continue to benefit from political development like this, at least before the end of the year. And of course, next year, we'll see how the French elections turn out. But we think these developments definitely supportive for sustainable investment and also high quality companies and some select European cyclical companies.